Good morning, everybody. I am Mike Cavanaugh and with Regiment, and today's clever conversation is with Mike O'Mara from OpZone. And welcome to the scheduled program, Mike. How are you doing today?
I'm great, Michael. Thank you very much. I notice you're in a car. Where are you driving?
Yeah, no, I got a late jump this morning, so yes, I'm in an Uber, which makes this conversation extremely clever. If we can have a conversation when we're mobile and on the road, you can have a conversation anywhere. Um,
Absolutely.
would love to hear um, what you're up to with Opportunity Zones. How you got to where you are. Kind of like your backstory, entrepreneurial journey.
Yeah, sure. I'd love to. Appreciate the opportunity to spend some time with everyone, and I'll try and make it as condensed as possible. Short story. I'm a commercial real estate practitioner. Been in the field for over 25 years. And the vast majority of my work was with investment sales and 1031 exchanges, oftentimes, net lease, passive type investments. So when the Jobs Act came out and opportunity zones, the key phrase that caught my attention was capital gains deferral. So I decided to look into it, and it led me down this long, winding path to where I am today. It was a very new law and tax code that it's really just starting to come into real focus of the benefits. So, I didn't have a roadmap, but I started to study the space, and then I got connected with Javelin Securities, which is a broker dealer. At that time, I was with Avis and Young in Boston, and I was just doing so much work in the opportunity zone space for a lot of different reasons that Javelin needed help finding deals, and that's where my real estate brokerage, skill set came in. I knew how to go out into the market and look at these zones and try and identify projects, developers, sponsors, and I was doing so much work with Javelin because they pivoted their broker dealer license to raise the OZ equity, but they needed the project. So fast forward, we started to do so much work together. They asked me to come on over and spearhead their consultant practice, which is really the tip of the spear, if you will. If there's a fit in a project after me and a business partner kind of scrub and underwrite, then we will bring in the broker dealer, and it could be other broker dealers such as your company to see if there's a fit to help the sponsor, the QOF, the QOZB, raise that OZ equity. So I'm still a commercial real estate broker. My license is with the EXP Commercial, so I'm kind of a hybrid right now, and it's an interesting time and place to be.
Yeah, no, that's awesome, and we'll touch on that in a second on the real estate side. Maybe from a high level, you mentioned 1031 exchanges. I've heard opportunity zones called 1031 exchanges on steroids in the past. Just for the benefit of our listeners, could you give us an educational backdrop on what is an opportunity zone? Like just from a high level.
Yeah, from a high level. So back when the Jobs Act came out, there were 8,700 plus or minus census tracts that were designated as opportunity zones, and they are low income census tracts primarily. I won't get into the specifics there, but the goal was to try to use this tax incentive to spur private capital to come into these projects. Now, from a government standpoint, you have a variety of tax incentives that are really debt instruments, sponsored by the U.S. government. Anything from new market tax credits, LIHTC, a variety of other things that I'm just not that technical averse in. But when the legislation came out, the intent was to try to promote these zones and create an investment vehicle for, it could be a mom and pop investor that sold some stock, or it could be an insurance company that has capital gains that want to try to defer their capital gains. And really, the bigger, longer term play here is the 10-year hold, and why you'd want to go into these. They the deals, both the real estate and business, the real estate is has to be underwritten and still be a good deal. It doesn't make a bad deal good. And the business side, which is very interesting, is more of a private equity play. So at the end of the day, if you think about the capital stack, the debt and the equity, the top slug is that OZ equity usually that investors, funds are looking to top off to help spur jobs, impact investments, and so forth in these low census tracts around the country.
Got it. That's helpful. So the tax benefit is huge from an investment perspective. Um, Kind of similar to a 1031 exchange. My understanding with the opportunity zone, um, in contrast with the 1031, is the asset class in the 1031 is similar or like real estate. You sell, you have a certain period of time to get into a similar real estate investment with a 1031. In opportunity zones, it's if I'm not mistaken, you can sell any asset class, um, and then that can get repurposed into any investment within an opportunity zone. Is that accurate?
Yeah, that's accurate. And actually, I didn't do a very good job to answer your last question. Why it's kind of on ozones are considered sometimes to be on steroids. From a 1031 exchange, it has to be real estate, like kind to like kind. And this was a real eye opener for me when I first learned about the regulations. Is that again, I said capital gains was the buzzword or keywords that caught my attention. Well, capital gains in the OZ world can come from any type of capital gains. It could come from selling your Apple stock. It could come from selling crypto. It could come from selling your business, M&A activity. And I think what I should just do quickly, because people, I think really it was a technical code. And it ran up against COVID, so a lot of things changed for people to even look at this. Is first there was a deferral that's still in effect that goes through 2026. Initially, there were two step up in basis, meaning if you got in that window was a 5 and 10% step up in basis, so it could be a total of 15%. If 2026 comes, your capital gains tax is due. And if you got in before that step up in basis was sunset, then only 85%, that would be the maximum, would be due. And everyone was really focused on that. Now, a lot of people, they have a hard time thinking about staying in a deal for 10 years. But that's really where the juice is. That's where the steroids are, is because whatever your basis is when you go in, at the end of the 10-year hold, and you don't have to exit at the end of the 10-year hold, any appreciation over your basis, there is no capital gains and there's no depreciation recapture. That's a very unique aspect. And also, these deals can be front loaded with accelerated depreciation. So, that's where people lose sight. And a lot of private developers, who are they put deals together and then they're looking for an exit at 3, 4, 7 years down the road. If you exit before 10 years, then your capital gains that you've achieved in that holding period will be due.
Yeah, that's awesome. Thank you for that explanation. It feels like it should be on the front page of the newspaper every morning, and they should teach it in our business schools across the country because it's such a great um, opportunity, no pun intended, to invest in. What? Why don't you give us a little flavor for some of the deals that you see, or give us some insight into how much fun you can have with opportunity zone deals.
Sure. Well, initially, when the regulations came out, everyone thought that it was going to be probably made up of 95% real estate deals, and that the primary asset class is multifamily, workforce housing, affordable housing, and then the 5% would be businesses. And I don't know if it was just how it worked out for us in Javelin, we kind of fell into more of the private equity, the QOZB piece, and so there's more risk there for sure, and a lot of these deals are new, so there's no like anything, you got to really believe in the concept and the management team, and it has to be thoroughly vetted and underwritten. But two of the deals that we came up initially with, and we've been at these for a while, is a project in upstate New Hampshire, in Berlin, New Hampshire, called North Country Growers. And they are an industrial agricultural operation. They're based out of Boston, coincidentally, and they will be growing lettuce. So you look at the whole ESG, the food security issues we are facing, and that suspect that this is not a short-term problem, and so we got to be more creative. So this is a really exciting project for us. We're going to be coming online. The sponsor is almost complete with their first greenhouse, and then they'll be rolling out several other greenhouses. Another deal that we came across was a metals and mining operation called Darwin Mine out in California that was owned once by the Chinese. So I've been following all the issues with the critical minerals and the issues with China. This deal is again, we've been at it for a long time. We're getting ready to they're really starting to get ready to mine the project, and the returns are they're strong. So those are more of a private equity business side, what would be called the QOZB. On the real estate side, locally, we've worked with a sponsor in Brockton, Mass. And this is something that's really interesting, is that banks are allowed to use their CRA credits and deploy equity into these opportunity zone projects. So we had a multifamily deal in Brockton where we brought in a bank that topped off that deal. There's a local sponsor in Boston that's doing a multifamily deal in Lynn. So we're seeing you might expect with the interest rate environments out there. There's a lot of sponsors that are kind of coming up short on their equity right now, and there's a lot of multifamily deals where they're going to have to refi out from their construction to permanent, which again is going to mean a requirement for more equity. And those deals, I think, will be very interesting because they've pretty much been de-risked, right? All the costs that in inflation and cost of construction that a lot of these newer deals have run into. I think there's going to be a wave of deals in OZs that they've been as best can be de-risked. So it's across the board. We've seen large industrial facilities. We've seen medical, hospitals, land, agricultural. So it's an exciting space. And being a service provider, I'm a commercial real estate broker. There's not a lot of people working in this space, which I would encourage more folks to try to learn. But it's just the way it's been. And, we've become a pretty good resource. The big challenge is the education piece. Still, it's ongoing.
Yeah. No, that's really good stuff. And for our listeners, CRA, that's Community Reinvestment Act. Is that
Correct.
right? Yeah,
Correct.
those credits.
Yep.
Yeah, everything you're saying, we see and hear a lot of, and you make a very good point, Mike, about education. I wish I would have known about opportunity zones earlier, because the advantages from the tax perspective and just the general investment perspective are tenfold more than like normal investments. Where is there a source that people can get educated on? Do you do educational events? Like how can we learn more?
Yeah, so what has happened for me, because I'm not a tax attorney or CPA or anything like this, so my learning has really come from the streets, and from lessons I've surrounded myself with what I call who are the people that are smarter than me. So I've got a kind of a stable of those types of people that we team up. But there are a couple of organizations and groups out there, and actually there's two events coming up in DC. One in October, hosted by EIG, which was one of the leaders as far as the legislation and the promotion, and they're hosting an event in DC in September, and then Novogradac, who I was, on there in their working group, but again, I'm not a CPA, so it was pretty technical stuff. But they're hosting their event in DC in November. So there's new legislation, and it's to expand rural opportunity zones, which I think is pretty exciting because everyone thinks more urban kind of core zones. And so there's legislation to extend through 2028 the deferral period. So we believe, or we're optimistic, that that's going to get passed, and that what everyone's wanted to see is reporting and compliance. That's what's really coming into light. There's got to be some benchmarks for the politicians and legislation to want to get behind this, because again, people that aren't informed think it's just another kind of tax loophole for private equity world or hedge fund world and so forth. And I'm not going to say it's perfect,
Yep.
but when you really get into some of the metrics and see the projects that are coming online, there should be more support behind it, and also a lot more education to what I call, the working practitioners out there, companies like you that, are represented as wealth managers to help, people long term, make smart decisions that, have an impact, ESG, and, earn, above average returns.
Awesome. Yeah, this is not investment advice. We are not tax and legal accountants.
I've already said
We'll
I'm
put
just a
the
broker.
disclaimers. Yeah, yeah. We're just having a conversation. But
Yeah.
what how can and I got to wrap up. I'm waiting for my breakfast here. But how can we get in touch with you? And are you taking deals from people? What can we send you? What can our listeners be on the lookout for? How do we get in
Yeah, a
touch with
couple.
you?
Yeah, a couple things. Steve and I are talking right now, and we're putting an agreement in place. So your company will have the ability to look at the deals that we're out trying to source OZ equity for. And I want to make a distinction or a caveat, is that these deals are not exclusive to just OZ equity. If you don't have a capital gains, you can still come into these deals. You just won't benefit in that tax incentive that's embedded in the deal. I would just say that if you have clients or know people that are looking at the structure and they have questions or need help with structure, we have a lot of resources. So first and foremost, I'm here as a resource and to help educate, and then we'll just see how a conversation may go.
Excellent. Mike, thank you so much for taking the time this morning and giving us a little education on Opportunity Zone. Look forward to working with you and have a great day.
Thank you so much, guys. I really appreciate it. Thank you, Michael.